So today we are starting into chapter 2, oops, which is talking about, we're going to actually start crunching some numbers. Make sure to bring a pencil and a calculator to class so that it's easy to use when we're doing our calculations. We're going to, I don't think, probably get to it today, but for sure on Friday we'll be, after you take your quiz, we'll be doing some practicing of crunching out some calculations together. So we're going to be dialing in a little bit more into the FLSA. We're going to identify what qualifies as hours worked. We're going to calculate pay, and we're going to look at different kinds of compensation plans. So the FLSA, we had a preliminary introduction to that in Chapter 1. It was passed in 1938, and there's a couple different kinds of coverage. What people oftentimes aren't aware of, that I think I spoke to last week, is that a lot of these laws do not universally apply to companies. There's caveats of what kinds of companies they apply to. You need 50 or more employees, or in this case, you need to have workers that are engaged in interstate commerce, which means either raw materials or final product cross state lines, interstate commerce, and 500 grand or more of annual gross sales. So if I'm a small little, I make dog biscuits in Shodo, and my market is all right around there, and I make it from spent grain, nothing crosses interstate lines, does it? So am I covered by the FLSA? Not. I don't have to comply with the FLSA. So what does that mean? I can hire people for less than minimum wage. I don't need to pay overtime. Okay? Now, good luck finding somebody in full employment that's going to work for less than minimum wage. But my point is that they're not covered according to interstate commerce, interstate coverage. The second kind of coverage you can have under FLSA is individual coverage, and I work for the little dog biscuit company in Shodo, but we also, that's not a good example. This is a better example that's up there. So that company wouldn't be covered. This is an example of we only sell $225,000 a year, but I'm in a fringe industry. In other words, I transport goods over state lines, or I produce boxes that are going to go into goods that go over state lines. Then the individuals within that company are covered. So there's really two different kinds of coverage: enterprise coverage and individual coverage. But many, this is important, this little caveat on the bottom, many small family businesses are exempt from FLSA. So they're really not, well, they're not required to comply with it. Both an employee and an employer are defined in the FLSA. An employer is anybody who acts directly or indirectly in their best interest in relationship to an employee. And an employee is so termed if he or she performs services in covered employment. And they look at something called the common law relationship. In other words, are you behaving like an employer, and am I behaving like an employee? So, I mean, this is kind of legalese, but it's kind of all about that little bullet that says common law relationship. How are each of you behaving? And let me just introduce these bottom three terms. We'll be talking about them a lot. The IRS tests this idea of common law relationship based on three things: behavioral control. So is the employer able to tell you when, where, how, what to do to accomplish your job? Do they have financial control over you? In other words, do they pay your wages once you've submitted a time card? And lastly, what's the perceived relationship? What does everybody or both parties think's happening? Okay, so that's how the IRS tests the relationship. And it applies to employees of all sorts of different kinds of organizations. Independent contractors are defined by an ABC test. We'll take a look at that a little bit more extensively. What's the difference between an employee and an independent contractor? Kelly?
the independent contractor is responsible for all of the social security taxes incurred in the
right? An independent contractor usually submits a bid, is accepted, invoices, is paid, and determines how he or she's going to accomplish the job. As part of that becomes the designation that he or she is self-employed, which means you're paying both shares of FICA, right? That 7.65 plus the 7.65. You're also paying your own workers' comp, your own FUTA, your own SUTA, your own insurance, your own pension, right? That's an independent contractor, essentially self-employed. It sounds really cut and dried, but it's not. There's a lot of gray area between being an employee and being an IC. And we'll spend a lot of time going back to that. Domestic help is anybody that works in your home, your nanny, your gardener, your chauffeur, your chef. I don't know about you guys, I don't have a lot of these kinds of people in my life, but if I did, I would have to comply with the Fair Labor Standards Act as I employed them. I would need to pay them minimum wage. I would need to W-2 them at the end of the year. I would need to pay them overtime. All those caveats apply if they work consistently more than 8 hours a week or earn more than $2,000 in a calendar year. So if I've got somebody that comes in after school every day and watches my kids from 3 to 5:30 in my home, I've got to pay that person. That's a domestic helper. I've got to pay them minimum wage. I've got to W-2 them. I've got to pay Social Security taxes on them. Okay? Food and SUTA.
What do you do with, because I know someone who nannied for like the whole summer, they didn't pay any taxes on it either.
Then you really have a wage claim against them. With that said, there is a tremendous underground market, particularly in urban areas, of domestic help that is not paid minimum wage and is not paid overtime and is not W-2.
They were paid well, it's just she didn't fill out W-2 or anything.
A W-4, yeah. I would say that probably describes 80% of domestics in this country. Okay, so what is minimum wage? Federal minimum wage right now, I believe, is $7.25. Montana minimum wage is $8.05. And the question is what all goes into that? Well, obviously it's the amount you're paid for wages, but it also includes things like your commissions, your non-discretionary bonus. What's a non-discretionary bonus? It's like I've got a profit sharing plan and it's a contract between myself and my employees, and if I tell them I'm going to give them 3% of the net income profit sharing in the form of a bonus once a quarter, I can't renege on that if my wife wants a new car. I want to take 30 grand out of the business for a car. Okay, I've promised them that. So that's included in minimum wage. Any on-call or differential pay, so I've got to carry a beeper with me, or I get paid more, a couple bucks more an hour at night, that's all included, and housing, meals, and transportation. So discretionary bonuses, i.e. at the end of the year, I look at my profit and loss, my P&L, and I say, I had a really great year. I think I'm going to give 80 grand back to my employees. That's a discretionary bonus, and that is not included in the calculation for minimum wage. These are other kinds of comp not included in regular rate of pay. So if you have a wage claim, for example, where you're saying they didn't pay me minimum wage, and your employer comes back and says, well, I gave her, a year-end gift. She won a trip to the Caribbean for top saleswoman, or, her vacation pay, or I gave her 80 bucks a month towards her uniforms. None of that's included in that calculation of minimum wage. Okay, those are all ancillary numbers, additional numbers. Okay, so I'm not going to spend too much time on this because you just don't see it that much, but there are certain exceptions to minimum wage. And if you're less than 20 your first 90 days on the job, you can be paid a training wage of 4 1/4. If you are an institute of higher education like we are here, and we've got culinary students that are actually training in the kitchen, We could by law pay them 85% of minimum wage because they're that second bullet, full-time students in institutes of higher ed. There's a complete list found on page 2.5, but again, like in periods of full employment, you're not going to get somebody under minimum wage, right? And then anytime where your state has higher minimum wage, you've got to pay that. So in Montana, it's 805. What's the difference between a minimum wage and a living wage? Anyone heard the term living wage?
That's cost of living where you're at.
Yeah. So I think we did, well, I know that we did, God, it's been probably a good decade now. We tried to pass a living wage ordinance in Montana, or in Missoula, excuse me. It's city by city, sometimes county, but usually city, or township. And like 10 years ago, maybe it wasn't quite that long, let's say 8 years ago, the living wage in Missoula was like 13 something an hour. I can't imagine what it is now. It's probably closer to 17 or 18 bucks an hour. And what that basically says is everybody that's got a federal contract has got to pay a living wage. Well, I mean, most companies don't have federal contracts, so why did we, as a community, vote that down? Why? What's the? Discuss the pros cons to it, okay?
Well, your wage would go up, so will the cost of living. So if you don't have a federal contract or you're not employed under something with a federal contract, your minimum wage is staying the same while the cost of living is going up.
That's the worry, is the upward pressure. The upward pressure. Now, economists will bring out their respective compilations of research and data that show differing conclusions of what happens when you introduce this sort of legislation into a community. Right now, we've got living wage, I think, in like 110 cities around the country. And like San Jose, California is, I think their living wage is, 20 some dollars an hour. You've got to pay 20 some dollars an hour if you have a federal contract, because the cost of a studio is 2,500 bucks a month. So, but it also really, just what you said, contributes to sort of spiraling inflationary pressures. On the flip side, when you have a town like Missoula, where housing costs are rising, double digits on an annual basis, and your wage base is locked in down here, you have, a homeless crisis, which is essentially, nobody really wants to identify it quite as such in Missoula yet, but I mean, go to Seattle, go to San Francisco, go to, any of these other areas where you've got a lot of pressure. Boulder, I mean, Telluride, lots of these towns, Jackson Hole, Ketchum, it becomes a real issue. So living wage proponents believe that this is a way to equalize the playing fields, and there's other groups of economic researchers that say just what you did, it just contributes to inflation. So we don't have one in Missoula. I guess that's all I have to say about that. Okay, tipped employees. Tipped employees are treated differently. Tipped employees is anybody who regularly gets more than 30 bucks a month in tips, and they can be paid a minimum tipped wage of $2.13 an hour. That does not apply in Montana. In Montana, you've got to be paid $8.05 an hour. So if you work at Plonk or the Depot or Paul's Pancake Parlor, you've got to make $8.05 an hour. If you cross state lines and did the same job in Coeur d'Alene, you would only need to be paid $2.13 an hour, because this is federal law, minimum tipped wage. Montana is one of a handful of states that requires employers to pay the full amount. Okay? How the heck can a restaurant in Coeur d'Alene get away with paying you $2.13 an hour? You've got to show that you're making the balance, or what would that be? $5.12 an hour to get you up to $7.25. You've got to show you're making that through your tips. Okay, so it can get kind of tricky. So let me just back up a second. So let's say that I work at a restaurant in Silverwood, in north of Coeur d'Alene, and my employer I show that I can make $5.12 an hour in tips. My employer gets something called a tip credit for that amount, right? So he or she still has to pay me 7.25 an hour, but I'm showing that I get 5.12 of it from my customers in the form of tips. He gets a tip credit for that 5.12. If I can't prove that I can backfill that with tips, his tip credit's going to go down, and he's going to have to pay me more than minimum tipped wage, because between the two of them, it's got to get me to 7.25 an hour. So in any situation, I've got to make $290 a week, right? If I work full time, 40 times 7.25. So I definitely have to prove that. Most systems now for most servers in restaurants and bars and clubs and whatever, it's a digital system where you can't even check out at night. You know, you can't even finalize your shift until you've input your tips and the calculation is conducted. So it generally happens automatically now.
So, the little experience I have waitressing in North Dakota, they would say only to claim so much as your tips.
8%.
Yeah, like, they're like, oh, just claim, because we're making hundreds of dollars in tips every night. Like, just claim.
Two problems with that. The one, okay, so the reason that they tell you 8% of your gross sales, so say that you sold $2,000 worth of food and beverage, and say you made $300, which would be logical, 15%. So you sold $2,000, you made $300, and they come to you and say, only claim 8%, which is 160. Why is the employer going to say that to her? What's it saving him or her? The employer. It's saving them FICA, because they've got to pay FICA on those tips. I don't want to pay FICA on $300. I only want to pay FICA on 160. And that's the minimum amount that the IRS requires.
So is that legal?
No, it's not legal. And the problem is, if you get audited,
Yeah.
how much would you say? And I don't know, I can't speak to North Dakota. I assume you were in somewhere around the oil fields. So this may be different there. But in general, servers, and I don't know the exact number, but what do you think they make as far as tips that come on a card that's traceable versus tips that come as cash? You think it's way more cash? I would say it's way more cards. I guess it depends. Or if you're at the depot, everyone's got a card. If you're, sloshing beers at a honky tonk on the oil fields, you could arguably say, yeah, it's way more cash. So, but the point is if you claim 8% and then you get audited and then they come in and they pull all of your card transactions, your documented transactions, and you're closer to 20% than 8%, I mean, you're both going to get in trouble. So the law says you've got to claim everything you earned. So with that, I would make sure that I was claiming at least what was documented, i.e. run through a card. So this is an example. I've got a gal that works 47 hours a week. Once you get to 40 hours, what does your employer have to pay you again? Time and a half, right? Time and a half. She averages $750 of tips a week, and her employer takes the maximum tip credit of $5.12. How are you going to get to her gross pay? So she's being paid minimum tipped wage, $2.13 an hour for the first 40 hours. And everything over that, they still back out the tip credit of $5.12 an hour, but her overtime rate is 7.25 times 1.5. So do you see that the tip credit remains the same in the first calculation, 725 minus 512. In the second calculation, it's 1088 minus 512. So the tip credit remains the same per hour, regardless if you're calculating within the first 40 hours or after 40 hours. Ask questions if you're not sure where something comes from. Okay, so this person works 40 hours this week and reports tips of $43. The question is she making minimum wage? Is she, if I'm paying her minimum tipped wage at $2.13 an hour? 213 times 40 is $85.20, right? Plus she got 43 bucks of tips. Is she making minimum wage? No, because 85.20 plus 43 does not get you to 290. What does the employer have to do? He's got to get her to 290. He's got to pay her more than minimum tipped wage. He can't get away with $85.20. She's working at a coffee shop in a depressed logging town where people are still leaving a dime under the coffee cup. He can't pay her $2.13 an hour. He's got to get her to 290 bucks a week. So if her tips are only $43, he's got to cut her a gross paycheck for $247, not just minimum tipped wage. Sure, exactly. Exactly.
So if they work less than 40-hour work weeks, like if they're part-time workers, so do they not need to do that?
They do need to do that. The math would just look, 30 hours times $2.13.
They don't have to be full-time.
No.
40 plus.
So the other calculation is that they'll go through and make sure that they pay the minimum wage, which shows that everything over that is just cash for the employee. That they make more than that.
It is, but they have to pay FICA on it and you have to match it.
Understood.
Yeah.
They still get that.
Oh, certainly,
It's
certainly.
showing that calculation.
Certainly. Yeah, point well taken. Then what if I work at a casino in South Lake Tahoe and I make $1,189 in tips? What does my employer have to cut a gross paycheck for? Yeah, for $85.20. But there's a huge problem here. What is it? What do I have to pay taxes on?
The extra.
I've got to pay taxes on $85.20 plus $11.89. Right? I've got to pay taxes on this amount. What do you know my Social Security or my FICA is going to be? Right? So if you run a calculator over that, I can just eyeball that and see it's going to eat up. It's $97.48. What's the problem? Go ahead. Yeah. My FICA is greater than the gross paycheck. So I'm not going to get a gross paycheck. I'm not going to get a check at all. And I haven't even calculated instead or sitting there. I just did FICA. So now what happens to me if this is me and I'm waitressing at the casino in South Lake Tahoe? My paychecks aren't enough to absorb my tax bill. What do I have to do? Go ahead. I'm going to need to make estimated payments to the IRS 4 times a year, quarterly payments. Because otherwise I'm going to get to the end of the year and I'm going to have a big old fat tax bill. See what I'm saying? And these numbers, this is, and now I work at Bellagio and these are my tips a week. Which, happens. People make big 6 figures in serving in some of the nicer places in Vegas. So all of a sudden you've got to hire an accountant, they've got to help you do the calculations because you've got to make quarterly estimated payments.
That's the employer you're talking about.
No, this is me. So this is whatever that math just turns out being. I just made this last week. And my employer is calculating the taxes on the gross amount that they're paying me from Bellagio.
So that, like you said, the employer is still liable to make FICA payments on the tips as well.
The employer's liable to make his, I'm sorry, I misunderstood the question. Yeah, the employer's got a match that, 7.65.
They're pulling that money out before the employee gets a check.
No, the employer just got to take that money out of his or her own pocket. So there's two pools of taxes, right? One comes from your check and one just comes out of my checkbook as the employer, as a casino owner. Yeah,
This would be in the case of all these tips were on credit cards, so like, we haven't been paid the actual money yet.
I don't know what Nevada law is. I believe in Montana, you've got to cash out your servers on a daily basis.
So it's almost like a clawback because you've already received all of the money.
Oh, yeah, you've already received all the tip money, but you're not liable as the employee for this, for the taxes on this.
Would the employer have to do a statement of, even if you had already received the money, to summarize what had been paid out in tips?
Sure, and that's all included into the payroll software. Absolutely. Absolutely. And that's also going to protect me because I don't want you to come back. I don't want to come back as the employee. I want to protect myself and know that this is all documented, that I've been paid minimum wage, that I've been cashed on my tips, and that my tax liability is calculated like this. But clearly there's not enough there to absorb it. Okay, and then this is, I'm not super conversant on this because this is kind of new. But in B, it says if employees must share tips with dishwashers, cooks, barbacks, etc., then this tip credit is lost. So a lot of times, I put myself all through undergrad and grad school, tending bar and serving all over the country actually. And in my day and age, you would tip out your dishwasher and your cooks and your barback and all the people that made you, successful on the floor voluntarily, right? And I mean, your cooks treated you pretty darn well if you tipped them well. So it was all voluntary. Now, a lot of situations, from what I understand, is that it's a mandatory tip sharing. Okay? If it's a mandatory tip sharing in your organization, the tip credit is lost for the employer. So if they say you've got to share your tips, then they can no longer claim $5.12 against you because you're having to share that. See what I'm saying? So that's not beneficial to the employer, but and this is just my understanding of a cultural shift, that cooks and barbacks and dishwashers are like, no, we want to be guaranteed X% of the tips. So that's where that situation stands now. Okay, on Friday, we will do the quiz. I'll continue to lecture on chapter 2, and I'm anticipating the next thing that you're going to give me, or next assignment that will be due in this chapter will be next Wednesday, the 12th. Chapter 2 homework. But you're not going to want to start on that yet because we haven't even gotten into any of the calculations, and that's the guts of it. I'm just trying to give you a heads up for workflow planning.
You said chapter 2 homework.
On Wednesday, the 12th, but you're not going to start on that yet because we haven't done any of the numbers together. I'm just giving you a heads up. Okay, we will see you on Friday. Be well prepared to spit out that tax table and your acronyms.